Good afternoon, traders, and welcome back to the Hot Stocks Outlook for November 9th, 2018. Hope you're all having an excellent week in the financial markets, and as always, plenty of great opportunities to cover as we see a lot of volatility coming into the markets, and that opens up opportunity. So we're going to start here with Kroger. We've got McDonald's, Boston Beer, EA, Electronic Arts, and also Baxter. But let's go ahead and start here on Kroger. And what we have here, and we have really on all these subsequent charts, are daily bars and candles. So these being the daily bars going back, we can see really towards October 22nd here is when this crossover comes through. But against that daily price action, you'll see that there's really a set of indicators here. Now, right up against the price action, you see that there is a black line and also a blue line. So that black line that you see on the chart, that is a simple, or what we refer to as an actual simple moving average. So what it is a really good measure of is where the market has already been. So it plots those closed prices, averages them together. But what we want to compare that value to is this blue line on the chart. And so for this blue line to be calculated, this software is actually performing a type of artificial intelligence process. It's using what's called neural networks to analyze how other shares, so other stocks, the S&P 500, the dollar index, futures markets, how other markets are affecting and driving shares of Kroger. And all of that data goes into to produce a predicted moving average. So an expectation of where prices are expected to move going forward. Now, when that predicted moving average, we can see crosses above that actual moving average, it's suggesting the prediction is that prices are going to start moving higher. Now, in addition to that predicted moving average and that actual moving average and how we look at that comparison, you'll also notice this indicator at the bottom of the chart. You see it goes from a green to a red, back to a green. And you're also given, before each and every trading day, a predicted trading range. So you have the overall trend direction as far as that blue line holding on whichever side of the actual moving average you have. The neural index, you want to match that direction as that crossover comes through. But what's really important to understand is you've really got a component of trend here as far as your crossover, a 48-hour forecast, so very short-term strength or weakness from this neural index, and intraday, so a predicted high and low level, and you can use those to guide your trading decisions moving forward. So what's really fantastic about this is as we look at this and say, okay, well, if that blue line is crossed above the black line and I want to get long, well, what does this forecast tell me? Well, you see after this trading day, it says, okay, well, expect a couple days of weakness, expect some lower lows to come into the market, but you want to remain long. That blue line still above the black line, and you can come in and use those predicted high and low ranges. So these predicted highs and lows are actually provided before each one of these actual candles is populated. Like you see here, we'll get the actual price data and we'll see how accurate that prediction is. But you see how this works. As this market's moving higher and you say, okay, well, where do I want to be a buyer? You have these guides to let you know, okay, well, the range is coming down a little bit. Be prepared for prices to move lower, prices to move lower still, and you can be buying at those levels. And you see that if you're buying here, we actually get the market closes here, and the next trading day actually moves much higher up to that $30 price level. But you want to be a buyer in line with, the probabilities here. Is the market expected to go higher? And over these short-term forecasts, should you be holding on to that position and staying involved with the trend? So really nice opportunity in Kroger, and you're seeing a lot of the market really tracking very closely. So a lot of shares turning up, some things still doing poorly, but a lot of volatility when you look at the broader indexes. So here, a 13% rally in shares of Kroger. Let's look at McDonald's. The same thing, very similar time period. We have our crossover to the upside saying, okay, well, look to get long McDonald's. A little bit of weakness over this period. You see you get these lower lows setting into the market. But the blue line, that predicted moving average, look at the distance between the actual moving average. So you're not in danger of getting across to the downside here. It's still saying, look, the trend is up. You want to remain long. And of course, use those predicted ranges. So each and every day, you've got a new prediction of, okay, well, you want to be a buyer down at these levels. You want to be a buyer down here, intraday, buyer down here. And so you can remain in that trend, but also get involved with a really great entry for a intraday level. So a good intraday entry on a longer term trend. You see 6 entries here, 7 entries in shares of McDonald's as this market climbs higher and higher. So really nice opportunities out there, but of course you want to get the timing right. You want to manage that position as it moves forward and understand how these forecasts are going to help you manage that position, know when to add to your position at an important level and make the most of these opportunities. So a 10% rally in shares of McDonald's just in the past 13 trading days. Here in Sam Adams, so Boston Beer here, crossover to the upside, very similar timing here, but you see very simply here, predicting some lower lows, this neural index going down to a red configuration, saying expect some lower lows coming in. But the forecast, that prediction, still well above the actual moving average. You see again here getting some lower lows from that close where that neural index went negative, but the trend still very much to the upside. So of course you'd want to say, okay, well, I want to look towards those good intraday levels to actually be a buyer in this market. And you see how you're able to adjust that position so that if you're an intraday trader, if you're a trend trader, you're getting really great entries as that move continues. So again, another about 6 entries or so in this market, and you've gotten some volatility, a little bit of up and down, but pretty strong uptrend. That blue line still above the black line, an 11% move just in the past 12 trading days. If you're buying from the predicted low, probably 12, 13% move in just a couple of days as this market moves higher over that 3-day period. Now, we had a pretty rough October, and you've seen a lot of shares, some things recovering, but other things you really still want to avoid. The Nasdaq's had some volatility and weakness to it here in EA. So we get this crossover to the downside, neural index at a 0. Again, you get these warning signs of when you'll get that counter trend move. But as long as that blue line remains, in this case, below the black line, the trend is still very bearish. You see a ton of separation between these values, and you can trade around that predicted moving average, knowing you want to be short that the trend is lower. And again, just another one of these instances of great opportunities to come in at these, intraday levels and set some short positions. And this market's down 20% over the course of October here, 24 trading days, but multiple entries. If we'll go ahead and bring this back up, multiple entries to short. You see here, here. I mean, as far as getting that good intraday level if you're a shorter term trader, but also as a trend trader, knowing where you want to add to that position and make the most of this 19.5% decline there in shares of EA, market down $22 per share. I mean, 100 shares or, option contract there, up about $2,200 as really the bottom falls out here. Same thing here with Baxter. So, we've had some recent strength in the S&P as things recover. You see a lot of those other shares were turning up midpoint in October, but Baxter here, not a place where you want to be getting long. So had you gone ahead and shorted this market, you want to hold on to those shorts. But of course, shorter term traders can, again, be using those predicted ranges. So understanding, look, you want to be shorting at these levels when you get that move higher, another retracement in the market that fails, another retracement that fails. And the last thing you want to be doing is getting long this market. As you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 entries from the predicted high. But obviously over the month and a half, your great opportunity to remain short, hold on to that position, and again, be going long in some of these areas like Kroger food, McDonald's, where you're getting that bullishness, but really hedging that portfolio and avoiding these areas where you see you're still down about 17, almost 18%. And as things in the S&P recovering, this gapping down and getting even worse here with another decline there. So really great opportunities all throughout the markets, to the upside, to the downside. You've seen, some markets recover towards the, later half of October here after things really move to the downside. But of course, you want to be adjusting and really evolving your position with what comes through these forecasts, how these markets subtly change, and make sure that you're getting those really great entries for whatever trading style and approach you're bringing to the market. So with that covered, again, this has been our Hot Stocks Outlook for November 9th, 2018. Thank you all for watching. Best of luck to the traders out there in the markets. Thanks again, and bye for now.